Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold prices. After seeing a pretty hectic week, ended up settling the week pretty much in the middle of the range. Now let's not forget we talked about a couple of key levels, 1330 being one of them, and we breached that level and we settled below it yesterday. And then we talked about being the 1325 was the level we had to really get below to see momentum shift. We did trade below 1325. But we're unable to sustain it. We rallied based off weaker jobs, based off what we're seeing, more trade war rhetoric. And gold prices rallied in the late morning, afternoon, and sort of took away some of that downside sting. Now, it doesn't mean a lot. Some maybe got out when we traded below 1325. There may have been some modest stops there. However, I think the majority were probably waiting for a settlement there, or at least something closer to a settlement near 1325. Obviously, we rallied about $10. And the market right now is just kind of back in neutral. It felt like it was a bullish ending to the week, which it was because we're off the lows, but we're really just still in neutral territory. And if you look at the 50-day moving average, we spent the last 2 weeks below it. The previous 3 we were above it. So gold right now still trying to find itself amid trade talks, amid Fed policy, amid equity debacles, new higher highs and lower lows, and just trying to keep up with the data. So right now, the gold market still looking for some direction, whether it be from the U.S. or other, and has not found it yet. So we're just in neutral territory. And what did the dollar do today? Well, it aided in that rally in gold. It was weaker. The dollar just can't seem to catch a break here, and it continues to find better selling, better negative news, whether it's about the data, whether it's about the government, whether it's about the trade talks, whether it's about a lot of things. And it just can't seem to sustain any upticks that we see. Earlier, we talked about this week the dollar had gotten a little bit of bid that is now a distant memory, and certainly the selling of the dollar, the declining dollar, is helping to bid gold. And lastly, let's talk about Fed Chair Powell spoke in Chicago today. He was supposed to be the key part of this week, how we were going to make everything fit together. The jobs number disappointed, but Fed Chair Powell didn't really hint that that was going to affect Fed policy. He remains on the gradual Fed rate hike pace path that they had set when he first took his first meeting. And I think that right now that the market is still very indifferent. They're looking for 75 basis points of hikes in 2018, of which they already got 1. So that leaves 2 left. There was whisper talk that they possibly could see an additional 4th tightening, but I think that's not really in the cards right now. Likewise, I think that Fed Chair Powell will likely open every meeting up as a live meeting to see a rate hike possibility, because right now the market seems to be glued to those quarterly meetings only and kind of puts those serial ones to the side. So I think they may enter that variable at the May FOMC. But for right now, he didn't really help or hurt gold, didn't really help or hurt the markets. We haven't seen a whole lot of trade around the Powell testimony today. However, he did stay the course, and that, of course, kept gold in the neutral zone. So right now, heading into the weekend, gold trading neutral. Next week, we may see more trade talks. We may see more risk off, which would promote riskless assets and which would promote gold. But obviously, we're not there yet. Have a great weekend, everybody. This is Todd Colvin coming to you from the floor of the CME Group.